Howdy, hello, chat. Thank you, everybody, for showing up as always. Appreciate y'all. I'm behind. But thank you, everybody, for being here as always. I appreciate y'all. Got a lot to get into tonight, baby. Oh yes, we got so much to get into. I mean, obviously, the gauntlet of earnings starts this week. And then really gets crazy, obviously, over the next several weeks. Next week's going to be even crazier than this week, right? So, yeah, a lot to go through, a lot to get into here today. Appreciate everybody showing up as always. Thank you so much for being here. Everybody in the chat, I appreciate you guys. Thank you for being here. Thank you. Thank you so much.
You're not at a point where objectively you can say that this is a really strong, healthy, durable bull market, whatever word you want to use to describe it, because if you're looking at something you just mentioned, percentage of members above their 200-day moving average, typically year after a major market low, you're well into territory upwards of 80 to 90%, not near where we're at right now. You look at the lack of participation from small caps, this has been the weakest advance going back to the history of the Russell 2000 off of a major market
that is true.
Index's history.
That is
and then
true.
Something that I know Chris has mentioned, this is the first time in nearly 100 years worth of data for the bank index that banks have been down.
That is
absolutely
absolutely true.
Market low. So I do agree with the fact that it's probably going to feed something that you and I were discussing last time with Mike Santoli of this narrative where you're going to be late cycle for longer, where you keep getting these conflicting messages from the market, with the market telling you, whether it's the performance of banks or the performance of small caps, that you're probably not through the worst part of the cycle, maybe in specific sectors. I agree that there are certain sectors.
Yeah, breadth hasn't been great in the market, obviously. So anyways, going through stocks there, a lot of green. I was talking about Pfizer. Pfizer's just another one of many super famous dividend stocks. Has been absolutely just killed this year. Just absolutely, horrible, to be quite frank. Avon's having a pretty good day. Shopify's having a good day. Cheesecake Factory having a good day. Amazon doing pretty well today. Elf on a Shelf. Texas Roadhouse. Even PayPal's up today. Man, if PayPal's up, it's a good day. Meta's up today. Tesla eking out little gains. Seeing Tesla only up 1% definitely smells like people might be a little concerned going into earnings. I would expect them to, perform a little better on a day like today. Let's go ahead and take a look at big tech here today. Wow. Literally every single stock is green today except Apple. Holy smokes, what a day. Every single stock of big tech is green except Apple. Apple is just slightly red. Interesting day. And you can see how much of a risk on day it is when you look at something like Shopify and Snowflake actually being up here today. In terms of leading the pack higher. Those are two of the, if you're going to talk about kind of the bigger tech companies, those are usually seen as like the riskiest ones, stocks like Shopify and Snowflake. And then, a lot of people look at big tech and they say Apple's the safest. And I think there's usually a debate about whether it's Apple or whether it's Google. And honestly, I think recently, Meta is actually starting to become known as a little bit more of the safer stock, which is interesting because that was so opposite of last year, right? People couldn't sell Meta fast enough. And Meta was just like, no one wanted a piece of that stock. And now it seems like Meta is almost being seen as like, a good combo of like safety and whatnot. So a good combo of safety and growth, I guess you can say. Let's take a look at banking. Citi's down today. JP Morgan down. Deutsche Bank, my favorite bank to pronounce, Deutsche Bank, is up here today. LA up. KRE is up. Regional Banking Index. Yeah, I mean, KRE, you see that baby go up. You usually know people are feeling a little more comfortable in the market because KRE's, Regional Banking Index, and just a lot of folks have not felt obviously comfortable owning that here recently. If we go ahead and take a peek at the Cathie Wood watch list, it looks like everything's pretty much green across the board there, as you would expect. Crypto, Bitcoin's having actually a really good day, which is surprising. Really, really good day. I heard there's some positive momentum in regards to potential Bitcoin ETFs and all those sorts of things. So, there's that going on. Let's go ahead and take a peek at Dow 30 stocks here today. WBA, you freaking dog. By the way, I just heard Rite Aid, I believe, filed for bankruptcy. Yes, Rite Aid, I believe, which is surprising. I thought they had already filed for bankruptcy, but I guess they hadn't technically. So, yeah, Rite Aid did file Chapter 11 bankruptcy. So, obviously, that's going to take even less competitive pressure out of the market for a player like Walgreens. So, from my understanding, they just had crazy amount of debt at Rite Aid, and then on top of that, they just didn't move a lot of product when it came to Rite Aid, and then they got hit with an opioid lawsuit situation that just put those guys under in regards to Rite Aid. So that makes the market a little less competitive, and obviously Rite Aid could potentially still be around as they go through the bankruptcy process, but ultimately at the end of the day, it's not a good situation, right? If you look at the best stock, Nike. Hey, Nike. I started buying some Nike here recently. I'm actually hoping the stock goes down. Nike's always just one of those premium brands, right? That you really want to be lower. But unfortunately, you can't have it your way all the time. So, let's see. FICO down today. I want to see that baby climb. FICO could be an interesting play, honestly, for next year if there's a much bigger contraction in terms of people getting loans, whether it's auto loans, home loans, anything like that. The stock has held up incredibly strong, obviously. I mean, look at that year to date for FICO. Woo! It's been a hell of a year. Chipotle's up here today. Let's check out the AI stocks. Wow, Palantir is actually lagging today. It's a little disappointing. Okay, let's see. Trending news here today. What do we got going on here? The market is in very good shape, said Hennessy Funds. Hennessy Funds? Chief Market Strategist Neil Hennessy. Dow up 13% compared to last year. Well, I don't know if that's the best way to look at it. 8 companies have been driving the success of the market: the Magnificent Seven, Nvidia, Meta, Amazon, Microsoft, Apple, Alphabet, and Tesla. He also mentioned Netflix. Those were the drivers of the downside last year, Hennessy said. In addition, the Dow Industrials is on pace for the 6th positive session in 7. S&P 500 and NASDAQ are tracking for first positive in 3 sessions. The Russell 2000 is outperforming, coming off the 5th negative week in 6. All 11 S&P 500 sectors are positive, communication sector, blah, blah, blah. He said he loves mid-cap arena because they can survive economic tsunami. Wow, that's quite a word. And they're big enough to make acquisitions in the small cap arena, and also big enough to be accreted to somebody else. Interesting. Hennessy's top S&P 500 stocks today: Pfizer, Charles Schwab, Dexcom. His bottom S&P 500 stocks: Moderna, and a few others. Enphase cut at BMO. Enphase had a bit of a struggle here recently. Let's see the 1 year. So this time last year, Enphase was like $237. It's 127 here today. Looks like it topped out back in last December around 320, 330. Wow, that's a big drop for Enphase. Enphase on Monday's trading is even. BMO Capital downgraded the stock to market perform from outperform with $148 price target, cut from $175, but still well above the current $127. The trough in U.S. residential solar demand is deeper than expected, and the timing recovery is uncertain. The analysts anticipate a trajectory for Enphase to resume sequentially revenue growth by around Q2 2024 is unchanged, but based on its updated U.S. Inverter demand assumptions, he now forecasts fiscal year 2024 revenues to rise only a modest 2% year over year, with demand unlikely to return to 2022 levels until 2025 or 2026. Wow. Analysts said Enphase shares have outperformed nearly every other solar equipment supplier by a wide margin since Q2 reporting season, which makes it harder to continue to justify the magnitude of the company's stock valuation premium. Interesting. Yeah, I mean, there's a lot of people, obviously. Oh, thank you. Thank you, every single person that subscribed. When it comes to Enphase earnings estimates, so Earnings estimates 24 forward PE based upon this year's numbers, 19 based upon next year's numbers. So I gotta say, Enphase's valuation has gotten much more intriguing now at this point in time. Certainly than it was in the past. In the past, it was not the best, right? Not the best. Let's take a peek at Enphase's recent financials. So let's look at quarterly. And quarterly is going to probably move all around. So sequentially, obviously, they've had some issues here recently, which Enphase used to be one of those companies that, even on a sequential basis, quarter in and quarter out, growth. It wasn't just about year-over-year growth. It was about sequential quarter growth, right? And obviously, that's died down here recently. Gross profit, pretty darn impressive, $323 million out of $711 million in total revenues, right? Operating income, $170 million there. SG&A, they've definitely kept that in line recently. You can see in the previous few quarters, they had over $100 million a quarter in SG&A. Now they're down to about $92 million. So strong operating income, $170 million there. So although their revenues have technically gone down, their operating income has actually gone up over the last few quarters. So that's good to see. As far as net income goes, $157 million. Yeah, that's a pretty darn impressive number. So, let's check out the balance sheet on Enphase here. If anybody owns Enphase, by the way, let me know in the chat. I know it's a fairly popular stock. Like, certainly it's not on like the Tesla level or like the Palantir level or some stocks like that. But in the chat, let me know if any of you guys own Enphase, because yeah, that has been a pretty popular stock. So looking at cash and short-term investments, thank you everybody subscribed. Thank you everybody for being subscribed and following here. I appreciate y'all. Total cash and short-term investments, $1.8 billion. Total current assets, $2.5 billion. Total assets, $3.4 billion. Total liabilities, $2.4 billion. Total equity of almost $1 billion. So overall, $1.2 billion long-term debt. And yet they got $1.8 billion of cash and investments. So damn, that's pretty freaking impressive. I'll tell you that. Very, very impressive balance sheet at Enphase. Very, very impressive. Wow. I mean, I just think, the real estate market being where it is just is tough on all these sorts of companies, like an Enphase, for instance. And so there's just not a lot of movement there. And I think it's going to continue to probably be a drag just for a bit here, a bit longer.
We asked rally on or rally soon to be over. The majority of you said, and they're taking a cue, I guess, from what's happening in the market today, rally on.
What do you guys think, chat? Will the market rally continue on, or will it come to a close? Love to hear your guys' opinion in regards to that. Do you believe we're now going to enter the, because this is right around the same time the market bottomed last year. So do you think it's up and away from here over this next few months, or do you think this is going to fizzle out? Love to hear your guys' opinions and perspectives in regards to that. Alrighty, so that was Enphase there. Somebody says down. Somebody says we'll go down in the coming weeks, but up toward the end of the year. So basically, kind of preparing for a Santa Claus rally. From my side, I'd say until the end of the year. Interesting. Appreciate it. So somebody says, Jeremy, can Palantir and Starlink find an exact location on cars on the road to be able to send that to self-driving part to avoid collisions and change speeds better? I'm sure, I don't know about Palantir, but I'm sure Tesla will be able to do that long term with Starlink. Like, there's no doubt in my mind. I think the biggest question is, like, how far is that away, right? But at the end of the day, if we think about autonomous taxi network on a high level, and you think about like cars being able to drive, let's just call it better and faster than ever before, the cars need to be able to communicate with each other. It's almost like, I'm sure you guys have seen movies like I, Robot and some of those other movies in the past. And in those movies, like the cars are all communicating with each other and they know exactly what each one's doing. The tough part of driving as a human is you don't know what everybody else is going to do. You don't know that this guy's about to accelerate faster and this person's going to decelerate. You don't know if this person's all of a sudden going to turn, especially the way people don't use directionals, but that's a whole other subject. And so humans are so unpredictable, and we have no way of communicating with each other when you're driving, so you don't know what that guy in that SUV is going to do, and all of a sudden he's got to cut over here and do this and do that. So if you're talking about cars being able to go much faster and it be in an environment where it's far safer, the cars have to communicate with each other and they all have to know what they're doing. Just bottom line in regards to that. By the way, thank you every single person that is following here. Thank you every single person that's subscribed. I appreciate each and every one of you for being here as always. So, alrighty, let's get rolling here. Let's see, green day in the market. Safety stocks kind of up looking to get more. Kraft Heinz. We got a Kraft Heinz buyer in the house? Whoa, how about that? That's interesting. Interesting. Anyone who drives a truck, they said. Yeah, trucks are very popular in Vegas, but I'll tell you where trucks are more popular, Arizona. Woo-wee! I don't know if you've ever seen as many trucks until you drive out in Arizona, man. It's like every freaking person has a pickup truck. It's out of control. I don't know if Texas is like that. Maybe Texas is like that too. But damn, Arizona, whoo, I'm telling you, it's insanity. So, let me see what's going on here. Oh.
That basically there's just not enough server build in the world that's going to happen to meet what NVIDIA is.
Somebody said Tesla drivers are the worst. Hey, stop that. You're being mean.
It depends massively on huge penetration of full self-driving, of this thing going from a hardware company to basically software margins. It's never been different. It wasn't different when it was a $1.2 trillion valuation, and now it's down where it is. It's doubled this year, but it's still well off the lows. I don't know. To me, there's no news in Kathy saying that her 10% holding is going much higher. And over the past 5 years, ARC Innovation is like in the bottom 1%. So the 5-year time horizon doesn't always bail you out either.
Yeah, no doubt about that. It's just interesting to, whereas one can justify one valuation while scoff at the other, it's interesting to just hear that perspective alone. Now, more bank earnings coming this week. Bank of America and Goldman Sachs out tomorrow morning. Morgan Stanley on Wednesday. Comes Steph, after you got out of the gates pretty well with the bank earnings. What's your outlook here?
Yeah, very good. Bank of America, I recently added to it. I also added to Morgan Stanley as well. So I think net interest income is going to be a little bit better than expected for Bank of America, Scott. If I look at JP Morgan's 15% growth year over year in NII, so I think it bodes well for Bank of America. But with Bank of America, it really is about expenses. If they do...
Anybody that doesn't know NII, net interest income. Net interest income. It's a popular thing you'll hear talked about in regards to a lot of these bank earnings we're getting right now.
At this point in time, because it's an operating leverage story. If they get the NII and they get the expense control, they're going to have a decent quarter. Morgan Stanley, we heard last quarter from James Gorman, the CEO, that capital markets bottomed. We also heard from the head of investment management throughout the quarter that capital markets have bottomed, right? Because of the IPO markets opening up a little bit, M&A, and debt capital markets overall. I think the number that people are going to be worried about or wondering if they can do this is 20% ROTCE. That is the number that everybody looks at. It's the highest in the industry, far better than Goldman Sachs, by the way, which is at 15 to 17%. So that's the number that I'm going to be looking for.
Okay. Mike Santoli, how about you on the banks? I mean, I guess we got kind of a tell, as I said to Steph last week. These are a little bit different business. Not every bank is obviously the same, but what's your view here?
I mean, I think that the minimum standard has been met with those that have reported already, which is nothing scary that we weren't aware of before. The credit stuff seems very manageable. And, yep, some of these are going to have some pretty significant unrealized losses in the bond portfolio. But we knew that based on what the overall bond market has done. So stocks beaten down, kind of cheap, unexciting. I don't know that there's going to be another really aggressive and enthusiastic bull case to come out of this, except for, look, we're muddling through, we're building book value where possible, and maybe the capital markets business has an upturn.
Steph, appreciate you being here.
Thanks for having me.
It's been fun out here in Beverly Hills. So, Mike, I'll turn it back to you. We're approaching 2 minutes left in the trading day.
2 minutes.
Interesting as well. We don't want to talk about it too much. Yields up, stocks up too.
Yeah.
So
it is true. Yes.
As long as you get that stabilization is key.
159 people now? What? What? That can't be accurate. What?
We've been in for most of the month. I think that is the key.
Hey, thank you every single person that's here. Thank you, chat. Appreciate y'all. Holy smokes. Thank you everybody that's following, subscribed on here. My goodness.
Hinge on stocks.
You got to be flipping my flapjacks.
There was sort of, I think, a lot of defensive positioning, as I mentioned. This is when the seasonal tailwinds are supposed to start to kick in. You had the closing of the Activision deal. That threw some cash into brokerage account. So, there's a lot of things you can build into a story for why we're getting a one-day pop that doesn't really pay that much attention to yields. But to me, 48 on the 10-year is the one that's been hanging out there for a long time as the high. And as long as we don't seem to be blowing through that in an aggressive way, maybe we can make our peace with it.
I was going to say to you also before we finished, hey, and we're doing all of this without Apple today, which was red until the last few seconds because it just showed on the right-hand side of our screen that even it now has gone green. I mean,
Yeah, I own Skyworks Solutions and I own Qualcomm. And then I've been on and off for probably over 10 years now with a company named Cirrus Logic, Cruisy Doozy. I don't own it at the moment, though.
That has really been kind of left out in the cold and gotten cheap. It's pretty tough for the S&P to be up, 1.1% and have the 7% holding of Apple completely ignore it. So I think that's what you're seeing right there, although still well below, the
Oh, a Tom Lee emote. We need that. We need a freaking Tom Lee emote. 100% we need one of those. 100 freaking percent. A Tom Lee emote, no doubt.
You hear the cheers. Hey, by the way, Reuters reported Triumph building a stake in Allstate. Insurance. What can I say? We talked about it with Todd Bowley at the very top. Hey, you might notice on the screen there, ringing the bell at the stock exchange today, Fast Money's Tim Seymour is there, and that is in support of the charity A Leg to Stand On. Proud of what you're doing, Timmy, with that organization. I will see you back on the East Coast. It does it for us. OT with Morgan and John begins now.
Lots of green and decisively so. There's your scorecard on Wall Street, but when
Wow.
it's late, welcome to Closing Bell Overtime.
Green.
I'm John Fort with Morgan.
Green.
And coming up this hour, we're going to talk.
All right, folks, we'll jump back over to CNBC in a moment. Time to play our game. Time to play our game. We play it every time after the market closes. How much was a public account up or down today? Everybody, put in your guesses in the chat. The time is to guess now, folks. Put in your guesses. How much was a public account up or down today? Spoiler alert, it's going to be an up day, okay? So whatever amount you think, let me know in the chat. We'll see who's going to be the winner and the chicken dinner. Alrighty, you ready? Man, some of you guys are freaking close. $28,931.15 to be exact was up today for the public account. And so I saw several of you guys had like $27,000 guesses. So shout out to some of you guys here. Carla, 27,570. That's freaking close. Really close. Somebody said up about 27,000. You were super close as well. Dang. Some of you guys are freaking really close.
Guys, welcome. Bob, so consumer discretionary was the best performing S&P sector today, up almost 2%, despite worries about the consumer in Q4. So what do you read into that? Are you heartened?
Well, there's no question that's one of the higher beta sectors in the market. So when you get a run like this, you would expect them to bounce, particularly since they got hit fairly hard over the last couple of weeks when the market went down. I want to underscore the yield story, 488 to 463, that 25 basis point decline. I know we're back up some today, but that's what I think caused the equity market to breathe a sigh of relief. More green on the screen over the last bunch of days, despite the geopolitical situation, et cetera.
Okay, so Richard, if you wanted to make the case then that today's action signals the start of a new bull market or continuing that start a year after the bear market low, how would you make that case?
Well, I think, John, the important thing today, if we're going to look at 10 minutes, I think the important thing today is that small caps actually outperform better than the large caps. I think that's a major step. It's a very positive event because if the economy is going to
I appreciate everybody subscribe. Somebody says they're my free subscriber. Thank you.
then small caps should lead the way. That's what history says. And so I think there's
100% he's right. If we're going to get into a real true bull market over the next 6 to 12 months, if that is to happen, small caps have to lead you there. That's a real bull market when you got the smalls rolling as well. You can't just have a few stocks at the top leading the way.
entire world. The answer to that is, of course, no. There are plenty of them. And I think the fact that we saw small caps lead the charge today was a very positive sign.
Yeah, and we're also getting earnings underway here.
Somebody said, you know the market is strong when even PayPal's up. True. Freaking true.
Yet prices that companies can charge to their end users and their consumers and customers, or the costs to actually make those products and services, because that's going to really set the stage for where this goes from here.
No question about it. Look, prices are getting a little tougher to get through with increases as consumers are balking a bit. But as you say, on the other side, you're getting some cost relief. Let's hope that contains. I think the margin story's got to be watched real.
Somebody said they had a question here. Oh, thank you, everybody. Subscribed and following here. Appreciate y'all being here as always. Somebody said, if I have any price predictions on upcoming earnings or stocks I'm most excited about. I certainly don't have any price predictions, but in terms of stocks I'm most excited about, really excited to hear Fubo's earnings. Extremely excited. I mean, they put up the Google Trends data for Fubo was just astronomically high in September, so I'm really just excited to hear what their subscriber number comes in at and what they're forecasting for the remainder of this year. So looking really forward to hearing their, I mean, obviously I'm looking forward to every single one of my companies reporting earnings, right? But that one is just one that sticks out to me in regards to that. Really looking forward to seeing what Amazon's bottom line is looking like. What is that net income? What is that earnings per share in Amazon? And for Meta, I'm looking really forward to the top and the bottom line. I really want to hear what's going on revenue-wise when it comes to Meta. And I really want to obviously see what's going on bottom line. Meta should have a, just ridiculous growth year over year in regards to their bottom line. So I can't wait for that one. Certainly looking forward to PayPal. The reason I'm looking forward to PayPal is PayPal just, I'm looking forward to obviously Alex Chriss is going to be his first conference call, with PayPal. So looking really forward to that. And the other thing I'm looking obviously very forward to is just getting the numbers out in regards to PayPal because, the numbers have been extraordinary for PayPal. You look at their last quarter, look at their revenue growth, look at their net income growth, look at their operating income growth. I mean, it was phenomenal. And so I'm just looking forward to getting back to the numbers and getting out of this, constant fear of that everybody's in. By the way, thank you everybody that follows. Thank you everybody that subscribed here. I appreciate every single person for being here and being subscribed. Let me think. So Tesla, obviously very scared about their earnings. I guess I'm looking forward to it because I'm looking forward to just getting the fear over with, but I'm very concerned with what Tesla's margins are going to come in at. I'm very concerned about, what Tesla's net income is going to come in at, the earnings per share, and those sorts of things. So, Tesla, I'm kind of looking forward to it, but looking forward to it from the perspective of looking forward to getting past, what we have to deal with here, which I don't think is going to be very exciting, just to be quite honest. Palantir, definitely looking forward to Palantir. I want to see more revenue acceleration from Palantir. I want to hear more about potential deals in the pipeline that are going to come to fruition at the beginning of 2024. So looking really forward to Palantir. Thank you every single person that is subscribed here. Thank you every single person that is following. I appreciate every single person, as always. Those are the ones that come to my mind that I'm looking the most forward to in regards to their earnings, folks. Those are the stocks I'm looking the most forward to that I hold. And obviously I'm looking forward to everybody. The restaurants as a group, as a whole, am I looking forward to the restaurants? Why am I looking so forward to the restaurants, folks? Well, I can tell you why. We hear all this stuff about all the consumers weakening and this and that. The restaurants are going to tell you. The sit-down restaurants will tell you if the consumer is really weakening or not, okay? When the consumer starts to weaken, you see comp store sales for restaurants go negative, okay? Are we going to see any of that? Or are we going to see these companies continue to put up very good numbers? The restaurants have been putting up great numbers the last year and a half. Or if they continue to, thank you every person that follows here. Thank you every single person that subscribed. I appreciate you all being here. If the restaurants put up great numbers and great guidance, that just means there's really no weakness in the consumer yet, right? When it comes to fast food places, that's a whole different ball game. Like, people are always going to eat fast food and, McDonald's and, Pizza Hut and stuff like that, Taco Bell. But when it comes to sit-down restaurants, it's a bigger expense. I mean, you go out with a family, to a restaurant, you're spending $100 to $200, right? And I'm not talking about a fancy restaurant. I'm just talking about an average restaurant. You go out with your family and you're treating, you're looking at $100, $200. You're looking at, $20 a person or so nowadays for restaurants, right? So, we'll find out what's the reality. Thank you, everybody that's following. Thank you, everybody that's subscribed. Appreciate y'all. Let's see how safety stocks finished up here today. Look at the freaking jam and jelly. They can never go up. The jam and jelly can never go up. Apple looks like it did finish Red Dead Redemption. Interesting. Guys, that's weak. That's weak. I'm going to be honest with you guys, okay? That's weak performance for the safety stocks here today. That's not a convincing rally in these stocks. And that makes me think like there's more tax loss harvesting coming in these babies. That's not convincing. That's not convincing at all, just to be quite honest. Let me jump in chat here for a moment and see what everybody's talking about. I want to know if Jeremy hedges Tesla Maesla. It is a consideration. It is something I'm strongly considering in regards to hedging against good old Tesla Maesla, especially given that I have over $400,000 invested in the stock. Might be smart. I'm expecting Fubo earnings to be great. I'm expecting their subscriber number to be pretty darn exciting based upon what I saw in Google Trends data. We'll see. But yeah, and obviously, moving forward, I really want to see Fubo continue to cut down on, obviously, their losses. That's a big thing for Fubo. Any of these companies that are losing money, they got to continue to cut down on losses. That's the main thing you got to continue to see there. Are you worried about or basically, are you worried about Palantir's earnings? Not really. Palantir just seems to be getting so many customers interested. It seems like Palantir is just in the freaking perfect moment right now. Thank you, everybody that follows, and thank you, everybody that subscribed to the channel. From my understanding, if you're subscribed, you don't have to see ads. That Twitch won't show you ads on this channel if you're subscribed to my channel. Palantir is just in the perfect position. You got AIP, you got so many people interested in Palantir from the perspective of, like AIP product. What does Foundry have for them? So many commercial customers. And simultaneously, you got what's going on in the Middle East. You got Russia, Ukraine. You got a world that's looking more and more dangerous, right? And so I can tell you, folks, it's a very opportune time for Palantir because their government business should continue to build very strong. You got to ask yourself, is there going to be more money spent on military related things or less money over this next few years, right? Well, given the world we're in, and especially in the United States, given that we like to get our heads in everything, right? We get our heads in the Russia, Ukraine, we get our heads in the Middle East. If China, Taiwan happens, we're going to have our heads in that. I don't think it's the biggest assumption to assume that there's going to be a lot more money spent on military and government-related things, and a lot of that money is going to end up in a company's pockets like Palantir. That's just the bottom line, right? There's just really no other way around it. So, I don't know. We'll see. But I'm very excited about Palantir's earnings. So, looking forward to cheesecake, yeah. You mentioned Fubo for earnings. You're a long-term investor. You believe it's for it to continue to ramp long-term with major competition. Yeah, no doubt it's a very competitive space, but honestly, I don't think that I know of a space that's not very competitive in regards to that. Fubo seems to have one really strong competitor, obviously. It's YouTube TV. Hulu wants to compete more and more in the space, but Hulu has a little bit of branding trouble. And also they're going through confusing situations with Comcast trying to split off from that deal and Disney being in full control. So, yeah, it's going to continue to be a very competitive space, and that's why it has to be a smaller position size for me. I can't go too crazy in that one because, obviously, it's, the way it is. Coca-Cola falling price since I stopped drinking cola. That's interesting. What a time. Yeah, all those safety stocks, which Coca-Cola gets put in the group of safety stocks, have been just getting slaughtered recently. have you seen many people talking about Palantir's products? It's insane. Yeah, certainly. I mean, it seems like almost everybody wants to engage with Palantir, to be honest. I mean, with everything that's going on in AI and just Palantir's at the cross section of data and artificial intelligence and helping you as a business make better business decisions, using your data and, using AI to help your business make better decisions. And so as long as Palantir can help you save more money, right, than what you're spending on it, or make more money, depending upon the situation, it's all that matters. A company can spend $20 million a year on Palantir. It sounds like such a huge number. Well, if Palantir is helping that company save $50 million a year, it's a drop in the bucket, folks. It's a drop in the bucket, right? So, I don't know. Just something to kind of keep in mind. Would you buy more Palantir at these prices? I don't know. I'm pretty comfortable with what I have. I have a pretty good chunk of shares. So, but it depends on many various factors. What do growth rates start to come in at? If they come in much stronger, maybe I do make a move there. I don't know. But I do have quite a few Palantir shares. So, and somebody says, housing, low demand, high supply. A lot of people waiting for rates to go lower, but then won't housing prices go up? It's definitely a potential, man. Is now the time for investment properties? I don't know. I'm not personally buying any investment properties right now. I own 2 investment properties, and what can I say about investing, real estate investing? I mean, I like it and I don't like it. I'll be honest. When it comes to real estate investing, you have to deal with BS. And I mean, stock market investing, you have to deal with BS as well, right? You have to deal with CEOs that can run a company in the ground, and you have to deal with all that, and you have to deal with all the gyrations of the market. But, the frustrating thing about real estate investing, even if you have property managers, you have different things that eat into your profit. So even if you I'm going to make X amount, all of a sudden this goes wrong with the house, or that goes wrong, or, it's not a nightmare, but it's not maybe as easy as people crack it up to be when it comes to real estate investing, from the perspective of it is work, it is stress, it is going to add more to your plate, even if you have a property manager. So, but in regards to could housing prices go up, there is a potential of that, folks, if rates were to go down. But the question is, if rates are going down, is it because the economy is getting hit? If the economy is getting hit at that time, then you could actually still be looking at real estate prices going down. But do keep in mind, in many recessions, folks, a lot of times housing prices don't go down in a recession. A lot of people are thinking like, oh, if we have a recession, that means great, I'm going to get houses for 20% cheaper than they are today, or 30% or 40% or whatever. Just keep in mind, folks, that's no guarantee. That was something we had in the Great Financial Crisis, but remember, the Great Financial Crisis was its own separate category. In many recessions, if you go back, real estate prices don't fall at all. In some recessions, they go up, and in some, if they go down, it's very slightly. So that's just some food for thought there that I think everybody should at least consider in regards to real estate, right? So somebody says, hello. Thank you, everybody that's following me on here, by the way. Thank you, everybody that's subscribed here to me on Twitch. I appreciate each and every one of you. Somebody says, Tesla Model Y sales are negative 60% year over year in Germany because no more subsidies. Time to sell some, perhaps? I mean, in regards to me with my Tesla shares personally, and you can watch the video I put out on the main channel yesterday. That went super into Tesla, the earnings, my views on it, and everything like that. But in regards to myself, I already took my huge profits in Tesla years ago, right? And so, the shares I have now, which is 1,665 shares or something like that. I think it's over $400,000. I mean, those ones I'm planning on likely just keeping long term. I might hedge against Tesla. We'll see. But, there's no doubt in the shorter term, Tesla's in, a tougher place. But there's also no doubt that longer term, Tesla has massive competitive advantages. And things that are hurting the company short term are going to turn into long term benefits. So, that's kind of where you diverge between what happens over the next 12 months versus what happens over the next 12 years, right? Somebody says, love that I'm on Twitch now. Thank you. Appreciate you. And happy to be here. It's been pretty fun so far. So what do you think about Verizon as a dividend stock? Yeah, Verizon, I've looked into it. I looked into AT&T. Those stocks have massive dividend yields, man. But The issue is, look at those companies' debt loads. I mean, it's a no joke as debt loads. You pull up Verizon. I mean, its debt is no joke, right? Let's take a peek. Oh, no, financials. Balance sheet. So this is the latest quarter they had. So pretty good amount of cash and short-term investments, about $5 billion roughly, right, which is an impressive number. But you take a look down at long-term debt, and it's $141 billion, and in a higher interest rate environment, it's like, do you want to hold the stock with $141 billion of long-term debt? And that's the tough question, right? And so for me, there's a lot of other dividend stocks I personally like better, so that's why I'm not a shareholder of Verizon or AT&T for that matter. I just don't want to deal with those debt loads because those debt loads are, I mean, substantial, right? That matter for Fubo in regards to his talk there, and you might ask yourself, like, why wouldn't like, just let's say ESPN get all the rights to everything, right? And then they put everything on ESPN Plus, and so therefore, like, companies like Fubo can't compete because, you know, ESPN just has everything and they throw everything on ESPN Plus, right? I mean, the real reason why that's not the most realistic possibility is these leagues are going to realize more and more, like, if you limit how many people can watch the games, right, even if it means more money short term, you're going to set yourself up for a problem long term. You need as many people watching this stuff as possible, right? A good example is Thursday Night Football. Thursday Night Football in the NFL is now on Amazon Prime, right? And so, you know, there's a lot of people that have Amazon Prime and don't even realize, honestly, Thursday Night Football's on there. So a lot of people just forget about Thursday Night Football because it's not on a major network. And so if you look at Amazon Prime, if you look at the Thursday Night Football ratings, since it's been on Amazon Prime, it hasn't been very good. And so I think that's more and more what these leagues, these teams, and these owners are going to realize is, dude, we need as many people freaking watching these games as possible, or our fan base is going to shrink more and more and more. Even if we get a big contract from one of these companies, at the end of the day, like, we need as many people watching as possible. The more people that watch it, right, the more potential you're going to sell tickets and sell jerseys and get people to like the fan base. And the more niched out it is, the more that fan base could potentially shrink over time for the entire league or for that team. And so I think net, that's just a reason why a lot of these teams, owners, in leagues are going to figure out, like, we need to be as many places as possible. Every once in a while, an exclusive deal, okay, we can do it. But if you do too much of that crap, you will shrink. How many people follow you as a team, which you need as many as freaking possible, right? You need absolutely as many as possible. Somebody said, quite the turnaround in Pfizer today, PFE. Yeah, about dang time. About dang time in regards to that, right? 3.6% move in regards to Pfizer. Pfizer, man, I've been seeing a lot of commercials for Pfizer. They got the Travis Kelce commercials, right? I saw they got Lady Gaga for some commercials, for some headache stuff. So, interesting times, folks. Interesting times. Pfizer's definitely spending a lot of money on ads and on, celebrities and stuff like that. I'm like, holy smokes. Thank you. Thank you, everybody that's subscribed here. Thank you, everybody that's following. I appreciate y'all. Somebody said pre-market, it was down like 3%. Wow. Somebody said, do I think Fubo could be bought out? It is certainly a potential. No doubt it's a potential. I hope it doesn't happen, but there's no doubt it's a potential, folks. Let's see. First year in the market, heavily invested in undervalued dividend stocks. When or what will cause people to pour money back into dividend stocks? The thing that could get people back into dividend stocks specifically is if rates start going down. So let's say you can't get 4.5% on a savings account at SoFi or Ally, right? Let's say, treasuries, you can't get 5% plus, 5.5% like you are today, right? I think when you start getting to that moment when people, are going to assume, oh, this is about to happen, rates are going to start going down, or they start going down actually, that could be a movement starting to get back into dividend stocks. And that could happen as early as 2024. It's not a guarantee. And if there's worries in 2024 about inflation, the Fed have to go even higher, let's say, for instance, then that could push the dividend stock momentum out another year. But there's no doubt at some point in time, money will flood back into dividend stocks. My opinion is probably in 24, as I've shared on the YouTube channels many times. But it's not a guarantee, as nothing is in the market. So, but that's really what will cause people to get back in divs is, people saying, damn, man, I might not be able to get these rates. I need to get in. So what I've been doing is I've obviously been starting to buy a lot of the dividend stocks here recently. I'm trying to beat Wall Street to the punch because I'm trying to get in as much as possible here over this next few months because I do believe early Wall Street money is going to start probably coming in to the dividend stocks in the first half of 2024. And then I think big Wall Street money will continue to pile in probably and rotate money into those in the back half of 2024. And so I'm just trying to get ahead of Wall Street. No different than last year. I tried to get ahead of them when it came to growth stocks. And that's why I was buying like Meta so heavily and so many of the growth stocks, right? I was trying to beat Wall Street to that punch. And fortunate enough, I was able to beat them there. And then, obviously early Wall Street money started piling in the first several months of the year, and then you got the big money to start piling in to a lot of those a lot of those tech stocks. And obviously, we know the moves those stocks have had. Like, it's been extraordinary. Meta's year to date is 152 freaking percent. Oh my, no, it's 157%. Oh my gosh, that's insane. Shopify's at 51%. Amazon's sitting at 57%. Tesla, oh my gosh, Tesla's sitting at 134%. My gosh. Palantir! We need a Palantir emote. That's what we need. We need a Palantir emote. We need a Tesla Maesla emote. We need a bunch of different emotes. I don't know how many we can do, but by the way, I appreciate every single person for being subscribed here. Thank you for also following, folks. Thank you. Palantir takes the cake. 171%. Only stock off the top of my head I know is doing better than that is Nvidia, which is pushing over a 200% gain so far this year, which is absolutely flipping, flapjacking, incredible. Wow. But anyways, guys, that's going to wrap up the stream for today. Thank you for being here. I'm shocked. We had over 150 people here for much of this stream. That's crazy. So thank you every single person that's here. Thank you everybody in the chat. Thank you all the fans, of mine that come to enjoy these Twitch streams and all this stock fun. It's going to be a very busy week, folks. A very busy week. A lot of earnings coming. Tomorrow is going to be really interesting. Wednesday is going to be super interesting. And remember, Wednesday's just an appetizer. Wednesday we got Tesla and Netflix, two very important stocks for the market. But I'm telling you, the real craziness, the real insanity is coming next week and the following week. That's when you get the gauntlet. That's when you get all the big techs reporting, and that's where it's just absolute insanity. And much love as always. Thanks so much for being here, folks, and have a great day.